Hello and welcome to another installment in the video series Romeo CRT 2023 trade review. The point of this video series is to look back on a whole slew of trades that has been released by Romeo to the community, and they're going to help us understand Turtle Soup's the 2023 setups that he was trading, because pretty much all these trades have a very similar setup that I've been trying to pick apart here. It's really benefited my trading, and I hope that having these videos on YouTube could serve as a resource for other CRT and Turtle Soup traders in the community. So today we're going to look at a trade that Romeo took after mid-May in 2023. And this is, I'm sorry, I think I labeled this video wrong. This is trade number 14. But yeah, I'll fix the title of the YouTube video, no worries. So the trade that Romeo took was in the latter half of May, really towards the end of the month in May. So you're basically looking at like a monthly distribution target. Now that I'm saying this, that's almost like a hindsight conclusion. The actual model that he's trading actually set itself up on May 17th with these highs right here at basically just above the 0.68000, the round number there, the psychological number. Obviously we have this kind of like delayed three drives pattern as we but obviously it's not the pattern, it's the context. This large down move that was really rapid in the, we'll call it Q1 of 2023, and then it hits the lows, and then you get accumulation, and the accumulation, that's how Q2 starts. So Q2 of 2023 with April, the month of April, we're in accumulation, and in order to get us out of that accumulation, we do a 2023 model. So in other words, we make a new high that's kind of a lower time frame Turtle Soup, then we distribute down into this rising trendline liquidity, though when we form the low there, we don't actually fully expand into the full extent of the sell side liquidity, which is where he draws his eye emoji to direct our attention to. This is a target level now, and then we do a fairly rapid bullish expansion, kind of like a symmetrical 3-candle CRT within this range, to push up to make the third drive of the 3 drives pattern, and that essentially like fulfills this model, the fact that we get yet another Turtle Soup as we wick above this round number key level, and more importantly the current range high level. Then we dump lower, and where Romeo has basically started this trade is actually in the discount of a bearish range. I follow him on Telegram and Twitter, and he recently said that one mistake that novice traders have is that we're always looking for like the exact wick of the exact most discount in a bullish range and the exact wick of the exact premium in a we're looking for like many premium trades, and it's sound, it's very sound, buy low sell high, right? But at the same time, there's an art to trading kiss of death that a lot of novice traders, they could see it, they could be told about the potential for kiss of death, but then they ignore it because they're filtering the potential to even short something in discount and to even go long something in premium, and this is where this 2023 model comes in, and it gives you a lot of validation, because when you look at this before picture here, there was volatility at the 50% of the range. So in other words, if 0.65628 is the range low, and here I'll go to my next slide. Yeah, it's like 68.12, we'll call it. So 65, 62 at the bottom, 68.12 at the top. If there's volatility in the middle of the range, and you don't get a turtle soup into this order block, so there's a question of, could this order block be a propulsion block, and could the rising trendline liquidity stay intact, and could the Aussie dollar just get stronger? There's a question there, and the open question is resolved by the time Romeo has screenshotted this, and I think this was like May 22nd. He screenshotted this after it has essentially been confirmed to him that there's a low probability of a breaker or a propulsion block reversal, bullish, and that there's a higher probability that will have bearish continuation. And he's essentially saying here is, since this is the daily chart, he's saying go to the lower time frames, go to the 1 hour chart, go to the whatever the, for me, it's like, since I'm trading the 2023 model exclusively, I would look at where is there an origination candle within this range such that a smaller range can form, such that when we do a CRT of that candle, and let me go to FX replay and I can show you guys. Actually, yeah, but before I go to FX replay, let me show you one more thing here. Yeah, we're basically looking for kiss of death entries. I don't think I've mentioned this, but like overall in the framing of this bearish 2023 model, it's on the week 1 candle, and it's quite an extensive period of accumulation as Q1 switches to Q2. So, you could look for reasons why a particular, and this ends up being a pause CRT, right? This is a pause. This 11-week period of accumulation is a very slow pause CRT on the weekly time frame of, we could call it, this particular origination candle, this FVG, and this breaker. This breaker is actually the ultimate target. But yeah, so a bearish pause CRT, I'm sorry, it's a bullish pause CRT leads to the bearish 2023 model entry. It's interesting. You could almost argue that this has given you multiple, because on the weekly time frame, if you treat this as the origination candle, then you would have 1, 2, 3, 4, 5, 6, 7, 8. So that fits the model, and then you get 2 or 3 candles of distribution. You got your 2, and then once we hit the close of this week, which is that, I believe it's the first week in March, then we have a bullish turtle soup. So this is why when I'm trading, maybe it's New Zealand dollar hit the new lows. I'd have to look back, but we always want to look for CRTs and look for reasons within these higher time frame analytical models, which I don't actually treat a higher time frame. I'm a scalper. I'm forced to be a scalper by prop firm rules. I only have futures prop firms, and when you're approaching target 2 and you've moved your stops to break even in your in the so-called analytical model, then you're treating that as like a framework, then you're essentially saying, okay, well, I'm allowing the market to, I could try to trade a kiss of death here, but I'm not going to marry it. And if this is looking truly bullish, like there was a CRT with New Zealand dollar, then we're going to look for the third drive of the 3 drives pattern, for example. All right, let's go to FX replay. And hopefully I'm going to actually switch over to FX replay so that, because there was a video where I didn't do that. It was kind of frustrating. So here we have, we're back to the daily chart, which was Romeo's analytical time frame here. And you might think that just looking at this chart and the fact that I've got this fair value gap highlighted, that we could be a little bit more, a little less decisive, and we could trade all the way up into this fair value gap and then maybe just not fill it. Or maybe we fill this BPR, but we don't fill the bearish FEG. One of those. But if you look at the timing of this trade, Q2 is underway with April, May, and June being the months. And if June is supposed to be kind of like a finishing month, then you'd expect in early June sometime to give a generous few weeks at the end of June to switch over into the next half of the year, the next 6-month candle, and the next quarter, which is Q3 of 2023. You expect them to smack some targets in late May and early June. If this is truly like a spot where you could have a reversal. Just zooming out a little bit, that move that Aussie put in was really dramatic. This is like this, just macroeconomically speaking, like Fed hawkishness, uncertainty to, did we really put the inflation genie back in the bottle? Spoiler warning, it's 2026 and inflation's still 3%. By design, on purpose. So what we're going to do is we're going to look at this kiss of death, and this is volatility but without going anywhere, which is an order block. Down, up, down. And this is essentially, we can trade back into this consolidation, and in trading back into the consolidation, we can expose the traders that are a little too short, that might have some trailing stop losses. Let me look at the fib here for the entire range. I like doing this. So if it's a bullish, treat it as a bullish range, that we're in a bearish progression down. We actually don't, so in other words, here, and then you let it hit the fib, and then you actually get a 3 drives on the daily into this BPR, which is it's a really great trade, because we're just peeking our head back into so I'm talking about a trade that happened before Romeo's kiss of death here, because really every single one of these ranges has 3 entries or even 4, right? Like you could have your model number 1 up here where you're being a hero and you're like, it's screenshot worthy, and you're literally like, catching this wick. It's a close shave, right, of a nice beautiful turtle soup of this overall range. You could have a breaker entry within on like maybe a lower time frame. So model number 1, on the if this were like the weekly time frame, I'd be looking for a 4-hour model number 1. So that's your order block. And then it is a Romeo order block, because it does have a classic Romeo order block, because it does have the bearish FEG, and then it's this candle right here which taps into the order block. So you could draw your horizontal line at the body. It's a fat up close candle, classically, right? Textbook. And we drive into that candle. So there's your model number 1 entry on the 4-hour chart. It's during the London kill zone, right? And then we just dump for the rest of the week. And then we open up markets on Monday and we get a little bit of a retracement. And this is these entries are timed within the week as well. So it took, with week 2 well, it's the true second week of May because May 1st was on a crossover week. But anyways, because May had 5 weeks during this May, 2023. May often has 5 weeks. But anyways, we have within these weekly candles, the actual model number 1 entry, it doesn't happen until Thursday. You could probably, if you're looking at this level and you're doing like a true screenshot worthy trade like up here, then you get it on Wednesday. So this whole entire week is like a doji, right? And let's go back to the weekly candle and we can look at it. It's a doji because you literally hit your highs. So I guess it wasn't exactly a doji, but it's kind of a mix between manipulation and distribution. But yeah, those 2 days that I'm referring to is pretty much a doji, right? Like it's like if you think back to like a CRT model, it's like the exhaustion candle where the candle expends a lot of energy forming a long upper wick that stabs into the buy side liquidity up here above the range, and then it distributes very conclusively lower, closes below the low of this candle here, engulfs it, yeah, and then it hasn't like expunged the entire range, but yet it's that commanding, and so that gives you yet another entry, which is trading into and what Romeo recommends is look for the opposing FVG, right? Look on the opposing range. So if you're in a bearish trade, your opposing range was bullish, and look for an FVG to be exploited after price has hit the 50%. So in other words, you're still in premium if you're bearish, and you're still in discount if you're bullish, but that's your second entry. Like that's like I think back in my journaling, like I've been trying to do this for a while. I've been trading like this for a while, and back in my journaling, I used to call this model number two, because it's your second chance. So you get in model number 2 here at the BPR for this particular trade, and you're short. Then there's another trading opportunity the following week, because remember that if we have if the first week of this distribution leg covered so much ground, we still have 2 more weeks or even 3 more weeks, but now that because of the first week being so aggressive, you'd expect just 2 more weeks. Oops, that's a 2-week time frame. That's too large. There we go. So in other words, if this is the manipulation candle, right, then the timing allows for 2 more weeks to distribute, right, which gives you time to get in. Like that first week, like after this distribution, you could say, well, oh yeah, like I'm gonna look for like the market to pretty aggressively retrace higher to give me an entry, so that the second week of the distribution could be a full distribution. And then Romeo's trade's actually in week 3, or week number 2, distribution week number 2. Like if this is like, if you call the peak manipulation candle, if you call that like the 0th candle of distribution and you start counting, that's what I've been doing. But yeah, so going back to the daily chart, because that was his analytical time frame, we're looking for a daily CRT of this really awkward doji, and it's really cool how price is fractal. So if I go to I think it's the 4-hour might do it, yeah. So the 4 hours gives you an interesting read, because that's the top of the range, and then you could pick an origination candle, and just to be safe, because I think what we'll do is we'll probably just trade up into this the breaker of this candle, I'm sorry, it's not really a breaker, it's more like a propulsion order block on the lower time frames, because breakers literally stick the other way. But yeah, if the wick of this 4-hour candle, which go to the 15-minute chart, right? And you'll see a bearish propulsion order block, a potential bearish propulsion order block. And within that bearish propulsion order block is a key level, which is the 50%, the equilibrium point of the range, to use those old ICT terms. So that's our entry, and that's Romeo's entry on the trade that we're actually talking about, this kiss of death at the end of this range. So 4 hours might actually be slightly too small of a time frame. In other words, this might have been an 8 hour. And I'm just realizing now how powerful 8 hours is for Forex. This past week, when I do my weekly review of I traded a lot of Forex this week, is a non-farm payroll week. And I just realized that, man, it was just an 8 hour model the whole week. Like a bearish, I guess it was a bearish pause 8 hour into a, but anyways, it was the 8 hour, and then like the 8 hour, I guess, distills into the 30-minute, like as a signal time frame, the way that the 4 hour distills into the 15-minute. It's the most logical. And so those two time frames, I was just like going back and forth. So anyways, we have this 8 hour model set up that I believe it's going to be 8, because if you treat this candle as the origination candle, or it might be this one now that I'm looking at it, because I always try to make my origination candles a swing high or a swing low. So if I'm looking for like bearish entry on a 2023 model, I'm always like, okay, my origination candle is the swing high, and as long as I have the time frame correct, I can start counting to look for that between 7 and 12 to expect for the turtle soup. And we're basically looking for a pause CRT of this bearish accumulative move, or maybe not. Maybe we're looking for like a quicker distribution, higher, like almost like an exhaustion. That actually might be the case with this one, is where we have a fairly rapid bullish move, but then we get a pause CRT, and so maybe we're looking for the classic kind of like exhaustion burst into into this candle. So we'll as the model entry forms, and we actually, we actually even soup that high, don't we? We soup this high. And you might be looking at this and like it takes a while. So we'll go to, we'll just fast forward here. I think it's actually more than 8 hours now that I'm looking at it. Definitely more than 8 hours. Oh yeah, no, we actually don't soup that high. I got a little lost. I'm sorry. Of course we don't soup that high, because that was the high that tapped into the breaker. I'm sorry, not the breaker, but the BPR, the FVG. So yeah, now we're actually in the trade, and I actually missed the entry. That's funny. I need more practice, right? So anyways, this little awkward guy is our origination candle being the start of accumulation, or maybe this one. So just going back to my rules, and I really have been adhering to these rules in my live trading. So yeah, this swing high is an inducement high. So inducement swing high is a great and super awkward candles. Obviously there's 3 awkward candles here, but this high like covers for those. We could expand to a higher time frame probably, it looks like, but no, maybe not necessary. 1, 2, 3, 4, 5, 6, 7. Boom, right there. So your 7th candle gets you in. Though, look at the timing. Like, yeah, maybe we'll just distribute really quickly. I was thinking that one of the advantages of going to a higher time frame. Oh yeah, so we don't get as quick of a distribution, but we're definitely like framing the early part of the week. Let's go to the 12 hour. Yeah. So, and again, we don't really, the timing doesn't, I guess you could treat, if you treat 12 12-hour, 1 day. Yeah, so this is another like kind of awkward one where we didn't, we didn't quite get the timing that I look for. But that's okay. Like not every trade has to like adhere to the exact, I think we don't really get the reason why we don't get like really rapid distribution with this particular setup is because in order for this to be like super rapid, like right away after hitting that key level, you'd have to have a much more faster bearish dump and then a pause. And then there's so much built up tension that the market's like coiled up like a spring. And so once that high is hit, then we get an immediate bang, 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 like an immediate distribution. But instead we get this accumulation into peak manipulation, and then there's a second pause, a second period of manipulation, or sorry, a second period of accumulation. And it almost does like the ICT 2022 model for traders back in that time period where you have like, where you have the high form, higher high within, this context of this range. And then you have a lower high, and that's like higher high into lower high. And so like on the lower time frames, the 2022 model traders would be like, yeah, like I'm looking for, price to trade back into this FVG or, but yeah, it's a little bit more of a pause rather than like this distribution, immediate distribution that often feels like you don't really have a chance to get in unless you've seen it, unless you see the 2023 model. So that might be very instructive for turtle soups, or sorry, for Kiss of Death turtle soups. Is that Kiss of Death turtle soups they necessarily might not follow the rules, especially given the weekly candle timing too. I was going to add that like this is on the Friday. Like this peak manipulation occurred on the Friday, and then liquidity withdraws into the Friday close, and then liquidity has to build back up again. And so it's actually the entire trading day of Monday is more accumulation. And I knew it was going to be an Asia session because Australia, the Sydney Exchange and the Reserve Bank of Australia, they're on a different time zone, right? And so I was thinking, well, Asia Tuesday is this rapid distribution. And here's another reason why KOD turtle soups might not be a KOD turtle soup. Depending on the timing, depending on the context, it might not need to follow a rapid distribution like many other 2023 trades have, because they're often, if it is a true kiss of death, because I think the kiss of death is interesting. There's kind of two components to it. Here, I'll just talk. I'm not even going to worry about writing. I have to kind of hold my microphone with my other hand. I need to get a mic stand. But anyways, here's the thing about the kiss of death is there's one way of looking at the kiss of death where it's like, yeah, it's literally just it's the move into the final target, right? But there's another component of kiss of death, which is kind of like underrated and maybe a little bit overlooked. Is kiss of death, is it important that it's actually an entry in and of itself? In other words, if every exit is an entry, right, then we're exiting our bearish position and we're flip-flopping and looking for a turtle soup entry after the kiss of death is played out, right, into the final target. We're looking for a turtle soup, a bullish turtle soup entry. But the timing might not be like maybe your bullish turtle soup entry is just a pause, CRT, into some sort of internal liquidity, right? Because look at the timing. I mean, we hit this on May 24th is when it hits final target. So like between May 24th and like early June is a pretty, you know, it depending on like the sequencing, like it might be a pretty quiet time. Let's actually just play it out and look. That's a fun little exercise to like, we looked at like the setup before the setup. Now let's look for the, actually, you know what, let me go to the higher time frame now that, we'll go back to the weekly time frame. Because this, yeah, this is a pretty big FEG. So like, this is a pretty great spot to have perhaps a weekly pause CRT. But let's see if we get any kind of, so I'll wait for that week to close. Yeah, wow. So the way that that's distributing is telling me that, well, let's see. We'll go to the 4 hour. So we get a, yeah. So just as I was saying, like, we do get an opportunity to get somewhat long. So whether it's, we would have to watch for many more 4 hour candles just to see. Oh, great reaction off that. So that's right there. That's the Romeo order block, right? Classic 4 hour order block there. It's got a nice long wick, so you could almost use the wick as the actual order block, which is what I've found. You do that depending on the proportionality between body and wick. But yeah, really, so yeah, we do have like a potential for like kind of a pause CRT to get us started. So like with price moving slowly higher, grinding higher, setting up a base, you know, you can start look for key levels, round numbers. We did hit a round number, 65, which is pretty low for Aussie. I think we're trading higher than 65 now, I'm pretty sure. 2022 is it was a low point in the global liquidity cycle. Really hard on FX, like just terrible on FX. Okay, so we don't, but we do get this like little mini, and then it, you know, obviously it wants to continue. But yeah, so that's the trade. Here, we'll get rid of these drawings. Actually, I'll just clear all the drawings. I'll just do a quick review of it, starting from scratch here. So we'll just redo our horizontal lines. That was the untapped liquidity, drawn liquidity. There was the former inducement high that was bullish turtle souped. Our three trades, model number one, you know, like, I guess there's 4 trades. Like there's LTF, like extreme aggressive, you know, lower time frame model number one, above the wick, or sorry, above the high, the old high. Then there's model number one on the 4 hour, which, because this is like a weekly model, out your 4 hours, your signal time frame. So your model number one candle was actually down here. So it's entering there. And then a 3 drives into the opposing daily FVG with that one. So there's your model number 2. And then finally your KOD, which I think is a unique KOD because of when it occurs week to week. Like it's like a Friday high and then you hold over the weekend maybe if you're a swing trader. But then obviously as the week opens, you're looking on a Tuesday Asia. Let's look at the lower. I never looked at the lower time frames to get that Tuesday Asia entry. That would be like my entry if I were trying to trade this. So yeah, so we're looking at, I think I put that ray. Oh, I'm too far. Yeah, it's this one. When I jump time frames, it skipped me down. But yeah, so oh, nice. This looks cool on the hourly because check this out. This is an hourly order block that never, like, even though we wick into it, we never even close within the order block, which is really neat. It's an FEG. There's a teeny tiny FEG. I think that's an FEG. Maybe not. But yeah, we get a nice turtle soup. But yeah, let's look at the Tuesday Asia entry. I'm just interested in this. This is really nice. So like, as a scalper, I'm like looking at this. I'm like, this is the origination candle. 1, 2, 3, 4, 5, 6, 7 into the London daybreak, and like this, like within the hourly, is going to give you a 5-minute model entry. So like, if this is like candle number 1. So like, because it's the fence post, this is like weird fence posting, but like, this is candle number 1, 2, 3, 4, 5, 6, 7 is your peak manipulation. And it gives you a 5-minute entry to then distribute. And this is like one of those like where you get your scalp entry to distribute. You get your 5-minute. So like, into this accumulation, this right here is a 5-minute order block. It doesn't really form a bearish FVG and then retest, but we do get that like close below. I'm going to do the body. It's a nice fat body. So we close below at 245. And then you could, since you're using it as an order block, you wick back into the body at 250, and it's like, bang, you can pull the trigger to catch that. And so that's the whole butterfly model, where it's like, price is fractal, right? So even if like let's say you're trading, peak manipulation was on a Friday, that Monday could be like laconic accumulation. Like Monday's Asia is like here. So you're like, okay, I'm like sitting around, I'm letting market just like wiggle around on Monday. That was like that was like a Telegram post that he made. It was like, let the market wiggle around on a Monday. Let the market wiggle around in the central bank dealing range or in the Asia session, right? Or even the entire first half of the day all the way until the New York Open. Just let it wiggle, let it accumulate. So we're letting it accumulate. And then Tuesday, and you're like, geez, you're like tapping your watch. You're like, come on, market, show me, and I should have like included New Zealand, because I'm fairly certain that New Zealand had, you probably had an SMT opportunity with the Kiwi, the correlated pair. But yeah, this ends up being a butterfly, like that lower time frame, like that 1 hour 2023 model, into that like context of that, like, the Tuesday, the weekly swing point on the Tuesday, and then of course our weekly swing point, we form this like, this weekly candle does not have a very high wick. Like it forms this little teeny baby wick. I guess it opens up here. It opens back here. It forms a little teeny baby wick, and then it just dumps. So it doesn't really swing hard into the weekly swing point, capturing internal liquidity. Perhaps because it was all purged on Friday. But yeah, and then we get short, and we have this beautiful. You could treat this as like a CRT as well, like a Friday CRT with like kind of a delayed distribution. So you could say like, it's this candle that is candle number 1 of the CRT, and then we're looking for an hourly entry model, which we kind of get. We have an FEG. I'll delete this one. Oh yeah. Yeah, I mean, it's you have a lot of latitude. I actually don't like, I'm like very much less into the lower time frame signaling. I'm more into like, find stay with the analytical model and just make sure your analytical model is like correct. And then these little entry signals I'm not so much bothered by. There's so many reasons to get short or long if you go to the lower time frames. Too many, in fact, and that's why you have losing trades, because you get distracted by the signal. But anyways, yeah. So on the 1 hour for your daily CRT, candle number 1 is Friday. Candle number 2 is Monday's daily candle, and within that candle number 2 during the Asian session of Monday, which is actually Sunday night, you have your it's not, it obviously doesn't like do a turtle soup of candle number 1, but yeah, you get your entry, right? Because order block, bearish FEG, it's a classic Romeo 2023 order block, and then we tap into that, and it's nice that we get this, we get the consequent. Well, I guess if this could be candle number 1, this could be candle number 2, and then these could be candles 3, 4. Yeah, that's actually better for CRT. Anyways, but I'm like mixing, because I'm like, now I'm like looking at 2023 and CRT and like synthesizing them, blending them together. So it's a little bit different. But yeah, this video has actually gone on for a while. So I'm gonna close it out, and I'm just gonna get ready to do my weekly review. So thank you guys so much for listening, and good luck trading out there. I'm looking forward to making many more of these and learning a lot more.